Hello, I'm Kimberley Dondo, Digital Content Manager, and welcome to In Conversation With, the podcast series that delves into the world of financial services and brings you face to face with some of the most notable figures in the industry. Listen as we discuss topics that are currently facing the industry and hear from visionary CEOs to disruptive innovators as we bring you a diverse array of voices and perspectives. We'll explore the challenges they faced, the lessons they've learned, and the insights they have to share about the ever-evolving landscape of financial services. Hello and welcome to In Conversation With. I'm Kimberley Dondo, and in today's episode, I'm joined by Alastair Black, Head of Savings Policy at abrdn. Thank you for joining me today, Alastair.
Thank you for having us, Kimberley.
So if you could give us a bit of background into yourself and how you got started in financial services.
Alastair Black, Head of Savings Policy. How did I get started in financial services? I guess I've been in financial services my entire career. I did maths and statistics at university and went into financial services to do actuarial work. But then throughout my career, I kind of got really interested in what the services we were providing as financial service providers. And so I moved much more into kind of proposition, marketing, policy, and my career has just moved quite far away from the actuarial side of things, much more into trying to understand what are, at a simplest level, what are the financial services that people need and how can we deliver them effectively? And then over time, that then moved into recognizing that the kind of government regulation was a big driver of that. So I got more and more involved in the policy side. So my career has probably moved throughout kind of closer and closer to kind of how do we deliver good customer outcomes in the context of we're about to talk about consumer duty. How do we deliver good customer outcomes? What does good look like? But also, how does government policy interact effectively with that?
Okay. Sounds very interesting, and also very helpful, especially to, our audience of advisors. So as you said, you at abrdn have done quite a bit of extensive research into the outcomes or how advisors are dealing with the consumer duty 6 months on. So can you share insights from the research commissioned on the experience of financial advisors 6 months after the implementation of consumer duty?
Yes, it might be worth me briefly touching on why this is so important to us at abrdn, and also why it really matters to me, why I'm interested.
Yeah.
So in terms of me commenting, so the bit of abrdn that I work in is the advisor platform business. And our entire ethos as a delivery, as a provider of platform services to advisors is supporting them to effectively deliver their service to their clients. Because ultimately, the success of the advisors that use our platform will drive our success as well. So we're inextricably interlinked. And because of my role working closely with the government and having an eye on change, we anticipated even before consumer duty came in that this was going to have quite a big effect on advisors, both directly and indirectly. And did quite a lot of work in the run-up to the implementation of consumer duty as of the end of July last year, in terms of trying to understand what the impact would be on advisors and trying to help them implement this effectively. So it seemed it seemed like an opportune moment to kind of take stock after 6 months after the implementation, to go, actually, there was a whole run-up of getting stuff implemented at the end of July, but since then, financial services generally have been trying to work out how do we embed consumer duty. So consumer duty was very much a kind of implementation program. It was about raising standards across all parts of financial services in order to ensure that people were held to that higher standard to deliver good customer outcomes. And I was really interested to understand where advisors' heads were in terms of actually how the last 6 months had gone, and things were starting to embed. And actually, as a result of the last 6 months, where were advisors prioritizing efforts, and actually where would they value more support and help from the industry, so industry providers like ourselves, but also from the FCA. And in that context, I guess the first question that we asked in the research was asking advisor firms the 4 outcomes within consumer duty. So that's the products and services, price and value, consumer understanding, and consumer support. Which of these were they most focused on? Which of these were they prioritizing in terms of enhancing processes and controls, and saw as being a key area that they wanted to raise the standards, going back to the FCA intent within their firm based on their services. Now, when we did the survey, we kind of expected that. I guess we hoped that there would be like 1 or 2 clear winners, which was very much along the lines of, which of these, and the entire industry is focused on one item and it's clearly important, and that's where we needed additional help.
Yeah.
And that didn't turn out to be the case. What we saw was pretty even responses from kind of high 40s to high 30% of customers, because we allowed firms within the survey to pick more than one item if they were focusing on it.
Yeah.
But it was a fairly even spread. So I think actually that in itself is fairly interesting, because I think it probably demonstrates 2 things. So one is on all of the advisor firms that we surveyed, every single firm said that they were prioritizing as part of consumer duty, looking at 1 or more of the outcomes. So that I think demonstrates a real level of engagement by the industry on actually consumer duty is here to stay. We've gone past implementation, but actually recognise implementation is not a one and done. As the FCA has said, it requires further work to enhance and embed that. And the fact that every firm we spoke to picked 1 or more of the outcomes, I think, clearly demonstrates they're all taking that seriously, which is great. The spread across all of the outcomes, I think, is demonstration of the fact that different businesses have got different models and different challenges. And so actually in hindsight, which is a wonderful thing, I guess it shouldn't have surprised us that it was broad, because different firms got different business models and will have their own kind of priorities. So I guess that was probably the first key finding, was that whole everybody is focusing on embedding this, but actually where they're embedding it really varies massively on a business by business basis.
Yeah, it seems to be that people are looking at different areas and making sure that they perfect every area, which I think is important for ultimately the consumer. But what notable trends or challenges have emerged for advisors in adapting to the post-consumer duty landscape?
So based a little bit on the research, a little bit on insights from speaking to firms, I would say that certainly our expectation and understanding, given we deal with advisors all the time, is that they were really well placed when consumer duty came in. Because at the heart of consumer duty is delivering good customer outcomes, and the entire purpose of the financial planning advice service is to identify what is the right personal outcome for each of their clients, and help them deliver those outcomes. So actually at the heart of the entire advice service is delivering good customer outcomes. But what the FCA was looking for was a raising in standards. And certainly our expectation, and what has come out a bit in the research, is that the key focus has been on, I guess, evidencing that and monitoring it. So it's not about are they delivering good customer outcomes. It's about taking that step back and thinking, how do I review my processes and controls and tighten things up? Now, the FCA also talks about prioritization, which is really important, and they talk about kind of materiality in the context of many advice firms can be quite small and not have the capacity to be carrying out the same level of detail as a larger firm. So prioritization and proportionality are really important. But I think where we've seen the majority of firms focus is really that looking at which are the key processes that matter the most in terms of ensuring that their clients get the best outcome, to ensure consistency of approach, and then monitor that people are getting the best. So it's about checking key processes are in place, ensuring that they're being applied consistently, and then identifying core MI that can be used to track to check that. So I've heard other commentators talk about actually the FCA Consumer Duty is not about saying we are delivering good customer outcomes, but it's a bit like, if I can use this analogy, given I did do maths at university, it's a bit like a maths exam, which is you've got to show you're working. You've got to show how you got there, because even if you get it wrong, as long as you've shown you're working and demonstrated you've tried, you're more likely to pick up your mistake and do the right thing. So very much it was around putting some, reviewing key processes, controls, governance, putting that in place. But importantly, not to the nth degree, because of the proportionality. The FCA is just saying, have a look at it, work out what are your key processes and put some controls in there. So don't try and do everything at once. Try and work out what are the most important things to do and kind of tighten them up.
Yeah. I have to say, after you said that analogy, maths was not my strongest subject. I was more of a scientist, not the physics kind. But I did find, when you do the actual formula and you try and work it out, then you can backtrack and go back and see, oh, this is where I put in the wrong part or something like that, and revisit and make that right. And also it helps the examiner see your thinking, and potentially you might get something out of that. But yeah, I think it's just a way of keeping those checks and balances. So that makes sense to me. But as
could I add a few things. So as part of that, we asked the advisor firms that we surveyed what MI they were gathering. So which things were they focusing on tightening up the controls and gathering. And again, that was really broad in terms of the different areas. It goes back to the point I made before about different businesses, different priorities. But there were a few things that came out which I thought were quite interesting. So in the long list of things, so quite high to the top in terms of the number of people that mentioned it was both reviewing platform financial strength and service standards. So we're really clear, platform or indeed any service provider, we're really clear that an advisor's service is very dependent on the platforms and service providers that provide services to them. What we found slightly interesting was there was actually a slightly higher number of advisors picked financial strength than service standards, because we know service standards really matter. But I would conjecture that one of the reasons why they picked financial strength might be because financial strength kind of underpins that continuity of good service. Whereas service at an individual point in time is not enough by itself. There's that combination of we need good service, but we need to know it's going to continue into the future. Then there was another area which was mentioned, which I think I was really delighted to see, which was staff surveys. So as in the advisor staff themselves. And that's maybe not immediately obvious in terms of gathering MI to demonstrate embedding good customer outcomes. But the culture of a firm, the FCA have talked about the culture of the firm matters, as the entire culture of the firm should be focusing on good customer outcomes. So carrying out staff surveys to ensure that consistency of view and positivity towards the delivery of those services, I think is a really good evidence point to check and monitor that the whole culture of the organisation is effective towards delivering consumer duty. So again, that staff survey was really kind of delighted to see that one called out as well.
Yeah, definitely. And as the industry evolves, what should advisors be doing to enhance their client interactions and meet the consumer duty requirements effectively?
Oh, blimey, that's an interesting one. I think that's down to individual firms, and I think what's clear to us is that actually the entire advice industry is pretty much built on developing strong client relationships and delivering those personal outcomes.
Mm-hmm.
So in that sense, I would have said probably it goes back to what I said before, which is just ensuring that the process is there so that all your clients get that consistent good outcome. So something about monitoring, so probably two things. So one is about monitoring, ensuring consistency of process to make sure everybody gets a good outcome. Another useful area in terms of client relationships might be to focus on potentially vulnerable clients. So it's another key focus that the FCA called out in Consumer Duty, which is recognising that some clients need extra help and need a bit of an adaptation to service to ensure that they get a good outcome, particularly where they've got potential vulnerabilities. So I guess ensure consistency of approach, but also trying to identify those clients that are more at risk of not getting a good outcome, so you can give them a bit of extra support. So really linked to that kind of vulnerability theme.
Yeah. And based on your discussions with advisor firms, are there any interesting anecdotes or noteworthy strategies that have emerged in response to the Consumer Duty?
So early days, I would say the key thing that I think most advice firms, and certainly we'd be interested in seeing as well, is a kind of an FCA Dear CEO letter aimed at the
yes.
Yeah. We haven't really had that yet. Seems to be an FCA Dear CEO letters to every other section of financial services industry, and I think that maybe gives some insight in terms of where the FCA's head are. But anecdotally, I'd maybe call out a couple of things which I find quite interesting. So the first one is there's a number of firms that we've spoken to who have recognised that as a result of trying to put this increased governance in place around the financial planning advice service, they're also recognising they have to do the same around their investment plan. So if they manage their own centralised investment proposition, in terms of designing the portfolio and managing that on an ongoing basis, they've recognised that almost doubles their work with regard to that kind of documentation of governance. And it's really called out to them the fact that they're potentially carrying extra risk and extra work in terms of managing an investment advice service alongside a financial planning advice service. I'm starting to see an acceleration. I'm not sure we've seen a wholesale move yet of advice firms that weren't planning on outsourcing their CIP, where they were thinking about doing it anyway. We've definitely seen insights of Consumer Duty's been that prod to say, right, I was thinking of doing this anyway. Actually, this has really brought to light the extra controls and effort I need to put in place around the investment advice process. So accelerated looking at outsourcing their CIP, typically to a discretionary managed portfolio service provider. So, and that actually came up in terms of one of the things, one of the items that firms mentioned in one of our surveys was one of the things that they were actively doing was considering outsourcing to a managed portfolio service provider. So one of the specific actions that they were planning on taking off the back of Consumer Duty. So that would be one. And one, it's appropriate to some people, but we've definitely seen an acceleration of that, or an acceleration of interest in it anyway. Then I guess the other one that I picked up is, this is probably more for medium to larger firms, so there's no reason why it couldn't apply for smaller firms as well. But for medium to larger firms, you've definitely seen some examples where firms have tried to differentiate their advice service to different segments of their client base. So, for example, that might be 2 or 3 segments, but I guess a really simple example of that might be an advice firm designing a service which they call maybe silver, gold, or even gold and platinum. And what does that service look like? So it might have a different number of touch points. If it's silver and gold, the gold service might be more complicated advice needs. And then trying to place their client bank into different segments and recognise that actually it doesn't need to be a one size fits all. There can be a different advice service based on client need. The really important thing that they've identified is that client need is not necessarily based on the level of assets they've got. It's based on their desire for support and actually the level of complexity in their advice needs. So yeah, a bit of a ramping up of differentiation of advice service would be other ones.
Yeah, I think those are all, they all feel obvious to me that you would need to differentiate because everyone's needs and circumstances are different. But I guess the implementation of this has allowed for deeper thought into it. And that can only, again, benefit that client. But I also wondered, how has the relationship between advisors and clients evolved, them deepening their understanding of people's circumstances and differentiating between clients' needs, and what strategies can advisors employ to navigate this changing dynamic successfully? I assume that means they're having a lot more conversations with some clients than others, or,
Yeah, it's probably, I don't think it's as much change as we think, because again, the nature of an individual, of a personal recommendation, which is what the advice service is, requires you to understand those client needs. So I don't imagine it's fundamentally changed. Certainly not seen any evidence of it fundamentally changing the conversation that firms are having with individual clients, because those clients' personal needs were the responsibility, and the advisor felt that responsibility anyway. I think it's probably, it goes back to that example I gave earlier of that kind of silver and gold service. You could imagine the advisor kind of sitting down with the client and explaining more about, this is, maybe explaining, we have two services. These are the two services. Here are the differences. Which of these do you think you need? Which of these, do you need the kind of basic service where we see you, once a year, or actually you want to be contacted more frequently? And have you got kind of more complex needs, which requires a different service at probably a higher price point? There's probably a bit more openness and transparency where you've got multiple services, but for a smaller advice firm that's probably provides, a fantastic service at an individual client level, I can't imagine there would have been a fundamental change.
Yeah, it should have always been that way. The conversations would have always been happening. Maybe the only major change would be the frequency in terms of what the client feels. And and Alastair, looking ahead, what proactive steps do you recommend advisors take to ensure ongoing compliance and success in light of consumer duty?
Yeah, okay, so I've probably largely covered this, which is that real focus on governance, controls, etc. But if not already doing this, and actually all the indications are from the survey that they are, because we asked them which of the outcomes they're focusing on, and they all picked one or two. And what are you doing to kind of gather MI? And everybody said they were gathering some MI and focusing on gathering MI to support demonstrating good customer outcomes. So there's really pretty clear evidence that everyone was doing it. But I would say continue to do that and focus on where in your own business model as an advisor firm, go through a process to document where do we think is the greatest risk of foreseeable harm of our client bank. So which process or group of customers are at greatest risk? And then think, right, what can we do to kick the tires on that process and just enhance and improve it? Because the FCA definitely sees consumer duty as being a continuous enhancement and continuous improvement process. So it doesn't mean look at everything. It means identify what is the thing that matters the most and then focus on that. So go through a process of thinking, this process or this group of customers are at greatest risk of foreseeable harm. So that's what we're going to look at and see if we can make it even better. How can we make it better, and what MI can we gather to make sure that everyone's getting the best outcome? The other thing which I think would be really worth doing is having a look at the FCA Dear CEO letters to other financial sectors. I think that can give some useful insight as to potential focus of the FCA in the future. Yeah, particularly where that applies consistently across sectors. But I'll maybe just mention one in particular, which I think is quite useful because they probably sit alongside the financial advice sector, which is a Dear CEO letter for wealth managers. And I guess that focused in particular on three areas. So the recent Dear CEO letter to wealth managers talked about the importance of controls around financial crime. They talked about risk of poor customer outcome where they were in either high-risk investments or overly complex products, and then the potential for overcharging of some clients. Now, in the research, we also asked the advisor firms that we research, what are the areas of foreseeable harm? So this links to the earlier point of my answer. What are the areas of foreseeable harm that you are most concerned about? Which are the types of customer harm that you think are most important and need to be worked on? And right at the top of that list were the potential for customer fraud, which clearly is linked to that financial crime risk. And then there was also the potential for overcharging individual clients, was also mentioned quite close to the top. So real link with advisor firms' views of the potential for foreseeable harm, and that SCA Dear CEO letter for wealth managers. So I think that's a really useful letter to have a look at to give a bit of an indication of where the SCA's head might be in the future.
Yeah, especially when it comes to those things, because you don't want to get caught off guard maybe later on and then end up having your own dear CEO letter. But also, in your opinion, what broader impacts has Consumer Duty had on the financial advisory landscape? I know we've covered quite a few points, but are there any additional points you wanted to make as well?
Yeah, definitely. And actually, I'll link to the last question of our survey here as well in a minute, because it's kind of so I talked earlier about the reliance that advice firms have on the providers of services which they use.
Yeah,
I think for advice firms, for their clients, my hope and expectation, and I expect advisors' hope and expectation, is that Consumer Duty will see a lifting of standards across all parts of financial services. That's got to have a positive impact on them. So where a financial advice firm is relying on platform providers, long-term savings providers, discretionary managers, investment houses, whoever, if they see an improvement in standards at those firms, that's got to have a positive knock-on impact on their ability to deliver an effective service for their clients as well. So I would say this is still embedding across all parts of the industry, but I hope that advisors are starting to see some changes start to come in from improvements in standards throughout the entire industry. I think the notable point here is that certainly when we speak to advisors, one of the common complaints we get is around service standards and communications, in particularly from legacy product providers. Now, of course, legacy product providers haven't yet implemented Consumer Duty. They didn't need to implement Consumer Duty on their legacy products until the end of July this year. So one of the questions, so I think some of that will still need to come through, and hopefully advisors will have a lot of help in those outside cases that use up an awful lot of time, and I know they get extremely frustrated with. But we asked advisor firms, what are you doing? What are you planning in advance of that coming in? Do you have clients who are invested with these legacy product providers, and actually, what are you doing on that? And we asked a range of questions, but interestingly, of our sample source, and we allowed them to tick more than one answer within the survey, but 12% of those surveyed said it basically they didn't need to do anything. And 13% said that they didn't have any clients affected, and there's probably an overlap of that. So that would imply that the vast majority of advice firms that we surveyed do have clients that are in that kind of position, and they're either waiting for the provider to do something or taking proactive action to reach out to those providers and asking them what their plans are with regard to Consumer Duty. So I think there's been a real focus on what Consumer Duty was implemented last year, and we're coming up to the 6 months anniversary of that. But we're also coming up to the 6 months anniversary in advance of the legacy product providers having to implement this as well. So, I think there's definitely a hope and expectation from advisors that things will start to improve after that date.
Yeah, definitely. And finally, I wanted to know if there are any specific challenges or opportunities that advisors should anticipate as regulatory expectations continue to evolve, and if you had any further findings you wanted to add.
So I don't think directly linked to consumer duty, but there's probably an overarching piece here, which relates to what type of client do I think the FCA is focused on from
Right.
a perspective, and actually what that might mean for advice firms. And there's a couple of things. There's a couple of items which are ongoing from the FCA at the moment, which I think potentially give insight here. So the FCA and Treasury announced or published a discussion paper back last year about the advice guidance boundary, looking at the ability for product providers to do what's called targeted support, which is, for want of a better word, a bit of kind of personalized guidance. So it's still guidance, but you can use some client personal data to try and help nudge them to a better outcome. And they've also looked at introducing a new form of simplified advice. Now, the interesting piece within the policy paper is they are suggesting that simplified advice is only suitable for those people in accumulation who are saving, not in retirement, because they believe that people need, because of the level of complexity of advice needs in retirement or in decumulation, and they think that people need full holistic advice, and simplified advice won't cut it. So I think that's one interesting point to note, is the FCA's focus on how complex people's needs and their potential increased vulnerability, if I can refer back to my earlier comments, of those people in the at retirement and post kind of retirement advice space, which of course is where advisors have absolutely focused, because that is where things get more complex and people need more help and therefore more advice, and has led to a whole kind of boom of advice in that space. The other thing ongoing is the FCA obviously initiated a review of retirement income advice in February last year. We're still awaiting the outcome of that. I wouldn't be at all surprised if the Dear CEO letter to financial advice firms made reference to both consumer duty and retirement income advice. So retirement income advice is complex. The FCA recognises it's complex, and they're doing a review of how that pans out. I wouldn't be surprised if that was an area that the FCA focused on, and therefore which I'm sure advisors are, and therefore an area that advisors might want to focus on too.
Yeah, definitely. It is, even from our own audience, it is an area that a lot of advisors have been quite almost anxious about, with impending changes and the review coming up. So, it's something that we will keep watching out for. But is there anything else that you wanted to add before we wrap up, Alastair?
No, I think I've covered everything that I wanted to do for my survey. Overarching, real evidence that, I think two kind of key points is real evidence of advice firms taking this seriously and taking action. I was really delighted to see the range of MI that advisors are focusing on, either looking at or enhancing, which is exactly what the FCA want. What the FCA want is that kind of showing your working piece. And I think demonstrating that you've got MI, you're having a look at it, you're checking that people are getting good outcomes, will do two things. It'll give the FCA assurance that you're taking this seriously, but also help you to spot when things are going wrong. Because exactly, with the best will in the world, things will always go wrong. We all have complaints. Yeah, I wish we did.
And we're all fallible.
Exactly, we all have complaints, but I think complaints are a fantastic opportunity, obviously, to go and work out where things have gone wrong and make them even better. So, complaints was definitely one of the top ones in terms of areas that advisors said they were actively looking at.
Okay. Well, thank you so much for this, for joining me on this podcast episode, Alastair. I think a lot of those research findings were very, very interesting, and we'll be interested to see, what the outcome might be a year from now, once the lenders have also come in and added their implementation of the consumer duty as well. So maybe we'll pick this up again.
Yes, absolutely. This is definitely going to keep it's going to keep running on and on. That's for sure.
Yeah, definitely. Okay, thank you.
Absolutely delighted. Thanks very much.
Thank you for listening to In Conversation With. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine. So make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, and Instagram. See you next time.